Hey, what's up, everybody? Peter, aka Joseph von Schmidt. Check me out on Facebook, Diamond Hand Apes. Feel free to like and share this video. This is going to be my third video talking about stocks and stock market and beginning investments. And I want to start by saying, again, I'm not a financial advisor. Don't hold me accountable for your investments that you make that are risky or whatever. I'm just going to share with you my stories, my success. I want to help people get financial freedom as they are, moving forward in life, getting towards retirement, getting towards wanting to be home with their families more, especially all this COVID-19, everyone working from home. What a great way to really build up your working at home, being with your family, and it's things that I'm starting to do more and more by using the freedoms of the stock market. But like I said, this video, I am going to talk about the cons of the stock market. There are big losses. You can face big losses in the stock market if you're doing things that are unsafe. Margining, options, these are things that can really affect you in like that. Boom, you lose a lot of money. For instance, for me, I want to talk about back when I started investing in my 20s. I'm 44 right now, and but in my early 20s, I started investing, and I put about I think 32,000 I had invested at from the age of 24 to or 22 to 24, somewhere in there. I should probably look at the calendar because right around 2007 is when we had a market crash, and I was involved with not only buying these stocks and buying technology, but I was also involved in margining. I never got involved in options. I really don't like options. There's a lot of people out there who do like options, but a video down the road we'll talk about options, but I personally don't like them. I don't like margining either, but if you understand what margin is and understand what option is, it might be something that you like. It might be something that you want to do. But again, for me, I lost $32,000 in a matter of a month with the stock market, my first go into it. And I was learning the stock market myself. I really didn't have many teachers. My brother was there with me, and he was learning as well, and he's doing very well in the stock market. And he continues to coach me on and help me as well, and that's awesome. It's one thing I love about family and my brother. He really tries to come out and help me out, and I really appreciate that. Again, if you haven't seen any of my older videos, I'm the type of person that really wants to just educate my friends and people around me, people in the wrestling world. I wrestle as Josef von Schmidt. You could probably go through some history on this channel and find me wrestling somewhere. People at my work, people around me, people who are trying to get involved with the stock market, people who are seeing that I'm doing actually pretty well in the stock market. So I'm just trying to share knowledge to help people get better. But with getting better, the stock market can be a dangerous place. It can be full of risk. You can margin, you can buy stocks on an absolute high, and then all of a sudden there's a recorrection that comes in. You could invest, $500, and then all of a sudden a stock pulls back, and your $500 investment has turned into a $172 investment right at the blink of an eye. And so we're going to go into losing money, selling in the green, buying in the red. We want to always try to buy in the red. We want to try to find a stock that we like on a red day. A red day is when it's getting sold off for no reason, or there's a excuse me, there's a certain reason Kangen water, best water on earth. There's a certain reason that it's stomped, and it's going red and it's bleeding out. And there could be some bad news. Like, so these stocks report quarterly what their finances, how they're doing, what they're making, or they're coming out with news like they're getting patents. Like medical companies are going to get patents, and they got the okay from the FDA to make drugs. There's new companies that are coming out, and they're just banking money quarterly on their profits, and they're going to be and people just want in on it because they know that company is going to be valued, that stock is going to run up. So buying on the red is when a company that you've researched, take this and understand that not every company. In one of my earlier videos, I said not every company that's just in the dumps or low is a good buy, because there are certain times, there's some reasons why those companies are in the red. They're about to go bankrupt. Their quarters and numbers aren't good. People just lost faith in them, and if there's not enough people in a stock to move it, you're kind of just holding what's called a bag. A bag is just you have an investment that's really not moving. It's not going up, it's not going down. You either could be in a loss, or you could have made money, but it's just sitting there and it's really not doing anything, and you kind of want to move your money around. Now, rule of thumb, Warren Buffett would say, and I agree with him, if you're willing to invest your money, you should be willing, or you like a company, you should be willing to invest your money in that company for 5 to 10 years without even touching it. Just let it do its thing. And I agree with that. I agree that there are companies and stuff that you do want to have a long-term investment in, and if you just start buying, like I like Virgin Galactic. I talked about that in one of my other videos. It's SPCE. I made a ton of money on it. Like I said, go back. These things are going to be things that you find for yourself. You're going to find stocks that you are going to invest in, you're going to put your money in, and you're going to let it ride, because in the beginning, you can't just sit and watch the stock, like me, you guys have work, you have kids, you have stuff, so you want to kind of put your money into something you believe that's going to be big in the future, that you can actually get at a low cost, and also there's things that are called yields. Yield stocks have let's just say it's like CBS, like Coca-Cola, like General Electric. These stocks pay yields, like they have dividends. And what that means is that they are going to pay you a certain amount of money or a certain percentage per quarter or per year or whatever they're into. Again, you're going to have to do your research. These stocks actually pay you to just hold them. Not only are you're holding the value of it, that's safe, but according to how it's moving for the year or for the quarter, you're also going to receive a certain percentage back of your money, interest. They're actually paying you interest. So actually, when I was younger, I was around a lot of people that were millionaires and billionaires. I know a lot of people who know me know that I'm rough around the edges and probably don't believe that, but I was very blessed and fortunate to have a lot of successful people around me at a young age, and I was actually not a snot-nosed punk that said, yeah, whatever, I know it, you don't. I actually listened to them, and some of the main things that some of these guys told me were that to be the most successful, or to be have the most freedom in life, is what do you use? What do you consume? What is your thing? Like, for instance, if your house is run on natural gas, what's the natural gas company that you use in your house? Try to get up enough money to buy the shares to where the yield or quarterly yield is paying for your gas bill. Try to buy the cable company that you're using, so their yields and dividends are going to pay for your cable. Try to use buy the car insurance company, so forth, so on, car company that you're buying your car. and then use those yields and dividends, and you're living financially free because the companies that you're buying. And then if you ever have a problem, you always can sell those stocks, and that money is there for you. So it was a great tool, a great thing that a lot of people told me, and it's really awesome. And that's what I try to work on my portfolio as well. Portfolio is what we call where we keep our stocks. Again, forgive me, I know there's people out there who know a lot of this stuff that are tuning in, but for me and my friends and the people that I'm trying to help, I'm trying to make everything really easy and really basic, because as we continue to go forward, we won't have to touch back on these things. We're kind of just gonna get it out there, and I'm gonna give this out for my AMC and GME family out there, GameStop and AMC movie theater. Us diamond-handed apes are gonna buy, we're gonna hold, and we're gonna squeeze those squeezers, those short squeezers. All right. So what that means is, so apes are stubborn. We're gonna hold on to. We're gonna buy a stock and we're gonna hold on to it, and we're gonna use our diamond hands. We're gonna squeeze every penny out of that stock that we can before we sell it. Now on the flip side, if you hear paper hands is someone who has bought a stock. At the first sign of it going red or seeing it red or starting to bleed, they panic and sell out of it, and they lose their money. And I kind of touched on that. I'll touch on it again because it's very important. If you buy in the green and you sell in the red, you're losing your investment. But if you buy in the red and sell in the green, whatever that green is profit for you. Not every time is it going to be like 100% profit or 130% profit. That's a super, got your finger on the pulse, and and you're in the right place at the right time, and you understand the charts and all that. But yeah, we want to always try to do our research, buy stocks that are going to be very somewhat stable and safe. There are going to be times where you're going to get these stock tips, and stock tips are going to be in volatile stocks, because the more volatile a stock is, the bigger chance of return. But on the flip side, you have a bigger chance of a loss. So keep that in mind when you're dealing with volatile stocks. Like Virgin Galactic for me it's still a volatile stock, but it's a stock that I see, for when my daughter turns 18, that is going to be the future. That's going to be the future. Like, I may never see millions of dollars out of that investment, but I'm pretty sure from what I see, unless things change, there's things that can change. There's catalysts. One company can look really good one week, and then all of a sudden new information, a new report can come out and could change that whole thing. So that's also the thing. It's not just like, oh well, Tesla is a great company and they're only going to go up, so I'm just going to throw my money in them. I'm going to throw my money. That's not always the case, because even Tesla has bad news. They went up and then they fell down. I think they ran to like 871 or 900, close to there. I'm off a little bit, but I'm kind of this is like beginner stuff, so I'm just going to kind of give you a range. They went, I think, around 900, fell down to 550, and now they're sitting somewhere in the 700 range again. I bought them at in the 550s, and then I turned around and sold them right in the 700s. So I took my profit. I'm not ashamed of that. It's all about building position. I took that money and put it in, not a financial advisor. I put it in AMC. I think AMC is going to do something. I'm holding on to that. I'm looking at it, watching it. I like the movement behind it. I like the money behind it. There's just like so many people, so many young investors out there who are really trying to grab the brass ring, and it's awesome to see. And I'm trying to support them as much as I can, because without the next generation, what do we have? We got to push into our youth. We got to push into our kids, and we got to help people get ahead, because that's really how we're going to change the world, is helping people get ahead financially. If you like this, man, or any of my other videos, please make sure that you hit the like button, that you share it, that you follow the link to Webull, which I'll put in the description. Make sure you get yourself a free stock. I like that platform. I use it to trade. You'll get a free stock just for signing up. You'll also get a free stock for a deposit, which in turn will give me a free stock. Hey, we both win. And hey, let's hit this market together. And until next time, may the stonks be with you. And I'll explain the term stonks next time. All right, guys.